Rent or buy? Man, it's probably one of the biggest, most stressful financial questions you'll ever have to face. For, generations, the answer felt super obvious. But here we are in 2026, and trust me, the game has completely changed. So let's crack this thing open, look at the new math, and figure out what really makes sense today.
All right, let's start with what we've all been told. The advice our parents and grandparents gave us. There's this traditional wisdom that's been hammered into our heads for decades.
You've heard this a million times, right? It's the absolute cornerstone of the American dream. And the data shows it. Over half of all Americans, 52%, still see owning a home as a major sign of success. The logic seems solid. Why would you pay your landlord's mortgage when you could be paying your own and building something for yourself?
Yeah, that's the billion-dollar question, isn't it? Because the whole economic world has been turned upside down, and that old rulebook, well, it might just be out of date. We've got to look at the new numbers.
So what exactly has changed? Well, it's this mashup of sky-high home prices and mortgage rates that are way up there. And that combo has totally rewritten the financial equation. On a simple month-to-month basis, the math is telling a completely different story now.
So check this out. Here's the new reality in one single number. Right now, the typical monthly mortgage payment in the U.S. is a whopping 21% higher than the typical monthly rent. That just flips the entire old script on its head. For the first time in a really long time, renting is actually the cheaper move, month to month, in pretty much every major city.
And in some places, the difference is just wild. We're talking major tech hubs where the gap is massive. I mean, look at San Jose, California. Renters there are saving, on average, over $4,700 a month compared to buying. That is not chump change. That is a life-altering amount of cash every single month.
So, you're probably asking, why is this happening? Well, it's basically a perfect storm. You've got these high mortgage rates crashing right into record-high home prices, and at the exact same time, there's been this huge boom in apartment construction, which means there are more rentals available, and that's actually causing rent growth to slow down, or even drop.
But hey, this decision is about so much more than just the monthly check you write. It's really a fundamental choice between two totally different ways of living, a choice between the freedom of flexibility and the security of stability. The trade-offs are pretty clear when you lay them out side by side. Renting gives you that freedom to move, and it keeps your money available for other things. Buying, on the other hand, offers stability and this kind of built-in way to grow your wealth. There's really no single right answer. It's all about what your priorities are.
Okay, so the renter's advantage? It's all about freedom. You can pick up and move for that dream job without going through the nightmare of selling a house. You don't have to lie awake at night worrying about a sudden $8,000 bill for a new roof, and you can take all that cash you would have put into a down payment and invest it somewhere else.
And the owner's advantage? That's all about security. Every single mortgage payment you make is kind of like a forced savings account that's building your net worth. You're totally protected from a landlord who decides to double your rent out of the blue. And, of course, you get to paint the walls whatever crazy color you want.
All right, let's get down to it. The ultimate question. For a second, just forget about the monthly costs. Which path, renting or buying, actually builds more wealth over the long haul? This is where the new math gets really, really interesting.
This brings us to a new idea that's getting a ton of buzz. It's called rentvesting. The strategy is pretty simple, actually. You rent where you want to live for the lifestyle, and then you take the difference, all that money you saved on a down payment and lower monthly costs, and you invest it into other things, like stocks, that could potentially grow a lot faster than real estate.
Let's just look at a projection over 30 years. So a homeowner might end up with $1 million house, which is great. But look at this. A renter who is disciplined enough to actually invest their savings could end up with a stock portfolio worth more. And check out the total sunk costs. That's the money you never get back, like interest and taxes. The renter actually spends less over time.
Now, the reason this whole rentvesting thing is even possible comes down to historical returns. The stock market, we're looking at the S&P 500 here, has historically delivered annual returns that are almost double what you'd get from U.S. real estate. And when you let that difference compound over 30 years, the results can be just incredible.
Now, if that idea of investing the difference sounds pretty compelling, but you're kind of thinking, okay, where do I even start? You might find this useful. Our sponsor, SFA, has a free stock investment masterclass that's really designed to help you get started with confidence. It's a great practical way to learn the ropes, and we've put the link for it down in the description.
So, after digging through all of this data, where do we land? What's the final answer? Well, the truth is, there isn't one. There's no universal right answer here.
because the right choice depends completely on you.
And this right here, this is the biggest catch. The entire rent-vesting strategy lives or dies by one single thing: your financial discipline. As one analyst put it perfectly, homeownership is basically a forced savings plan. Renting and investing means you have to create your own savings plan and, more importantly, stick to it month after month, year after year. And that can be really tough.
So, to make the call for yourself, you need a framework. First, ask yourself, how long do I actually plan to stay here? Buying really only starts to make sense if you're staying put for at least 5, maybe 7 years. Second, you have to run the numbers for your specific city. Third, be brutally honest with yourself about your discipline. Are you really going to invest the difference? And finally, what do you truly want out of life right now? Is it the flexibility to chase opportunities or the stability of putting down roots?
You know, when you think about it, this whole debate forces us to ask a much bigger question. Whether you're building equity in a house or building a portfolio in the stock market, both paths are an investment in your future. So maybe the real question isn't rent versus buy. Maybe the real question is, where and how will you choose to invest in yourself? That's the one you have to answer.